anti-faith-based system, in other words, the true money of legacy standing that is known for history, millennia, gold and precious metals, is the king. So gold is the king, and that's essentially what I'm highlighting here. So I'll just make sure that everybody's looking at the same place. We have this larger set called anti-fiats in the luminous green here, and then I'm saying the king of this entire set is gold, and there he goes. Then you know the sort of knave joker, semi-important but not quite the king, is silver. He moves after. If the king stands up for to leave the dinner table, everyone remains sitting until he's left the room.
Gold is the money of kings, silver is the money of gentlemen, barter is the money of peasants, but debt is the money of slaves, noted the renowned author Norm Franz. The all-time highs in gold prices in 2024 are closely followed by those in 1972 and 2011, when the precious metal peaked 38 times. This year, March, September, and October saw the largest number of new highs in gold prices, said Johan Palmberg, senior quantitative analyst at WGC. Seasoned technical analyst FrancisHunt discusses the outlook of precious metals going forward. To visualize the anti-fiat category, Francis presents gold as the king, leading the trend with silver and crypto following. He asserts that while silver and other assets may outperform gold later, gold sets the pace, mirroring Bitcoin's role within cryptocurrency markets. The popularity of Bitcoin has grown in the recent surge in inflation as a hedge against it. Investors have gradually considered it a store of value like gold. Due to the loss of buying power of fiat money, many turn to Bitcoin to maintain their wealth. From a technical perspective, FrancisHunt favors gold over silver due to gold's leading role and stability, while silver typically follows. Based on market trends, Francis describes today's economy as anti-fiat, tied closely to debt like a shadow to light, both approaching a cycle's end. When the U.S. officially abandoned the gold standard in 1971, the country's debt stood at $23.2 billion. That's $175 billion when adjusted for inflation. Under the current fiat system, national debt has skyrocketed to over $34 trillion with no signs of slowing down. Now we present the clips of FrancisHunt's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Only silver has the higher beta, and this is something we continue to make as a point. Rather be overweight gold than silver right now. There's two reasons why silver not yet. And it will eventually do, like an altcoin, and hence why it's the same for crypto. This has been a Bitcoin dominance crypto market. People haven't realized that. We technically chart that. You've gone from 39% through to almost 61% on Bitcoin dominance. So that is the big guy of the room, of the market category. So we actually did a diagram, and we did it in our last Substack. It might help bringing a small visual element to this, if you'll allow me.
Please.
Because we speak of a category that we refer to as anti-fiats. So those are the faith-based system that is typically currency and all that goes with it. And we kind of categorized, hold on a minute, this is how you need to see things and visualize this. So if I actually show this to you, and I'll start sharing screen, it'll help make sense rather than this just being a word salad of definitions, etc., etc., because pictures speak 1,000 words. So let me see if I've got share screen now. This is anti-fiat category. And we mentioned that it's got quite a few things that are pitched. So if you're concerned about debt and money, but they go hand in hand. Money's borrowed into existence. It's like an evil twin sister that follows you around. Mm-hmm. You can't be yourself at night and not have a shadow wherever there's light. So there's debt and fiat currency. If you're concerned about that, which I think you should be, I think it is the economic question of our time. We have come to the end, all bar the singing and the final collapse of a faith-based. We've had a turn in the bond markets. Our biggest technical call that we'll be making, and our earliest one and our only one on the bond market, was in 2020 in August, saying the market has turned, a 40-year bull is over. We never called the bull for bonds over ever before. It's the first time and it's the only time, and it was high conviction and it was early. We now, 3 years later, have Stanley Druckenmiller and others now talking. Possibly they had the trades a long time before, so I'm not saying necessarily I was before them, but they're now openly talking about it. You also had Paul Tudor Jones, you had a bunch of others. So what do? The anti-faith-based system, in other words, the true money of legacy standing that is known for history, millennia, gold and precious metals, is the king. So gold is the king, and that's essentially what I'm highlighting here. So I'll just make sure that everybody's looking at the same place. We have this larger set called anti-fiat in the luminous green here, and then I'm saying the king of this entire set is gold, and there he goes. Then you know the sort of knave joker, semi-important but not quite the king, is silver. He moves after. If the king stands up for to leave the dinner table, everyone remains sitting until he's left the room, and then they follow. In the same way, if he picks up his soup spoon or whatever and starts eating, everyone starts eating. And then you have the miners to a degree. Now, both of these can, in beta terms, outperform subsequently once the trend is very clearly established. But initially, the king makes all the running, but is the highest one. Now, inside the anti-fiat category, we also have this new category, which I've made in red, and it's called crypto.
Fundamentally, FrancisHunt emphasizes that miners offer far more upside than downside, making them attractive investments even if they don't immediately rally. He suggests rotating into Bitcoin, silver, and eventually miners, which he believes have the highest potential gains. Gold is rocking again, as it did in the 1970s when the metal was the decade's hottest investment. The same can't be said for gold mining stocks, but they deserve a closer look. A report from Data Intello said the global gold mining market was $208.9 billion in 2023 and is likely to reach $274.2 billion by 2032, expanding at a compound annual growth rate of 3.50% during 2024 to 2032. Market growth is attributed to the impact of automation and robotics on mining operations. Using a firing order analogy, he explains that gold typically moves first, followed by Bitcoin, and then silver, with the gold-to-silver ratio expected to drop to signal silver's next move. Let's get back to the interview.
There's timing the market, and there's just knowing when something is cheap and very asymmetrically got more upside than downside. Right now, I can already tell you that miners asymmetrically have way more upside than they have potential downside, and that makes them investable, even if that doesn't mean they start moving in the direction you want them right away. We've already seen one or two of the bigger miners move, so Newmont, etc., but you're going to have a ground swell. I'm a very visual guy, and I think particularly a very male-dominated industry, it helps to have diagrams. So forgive me, I won't keep it long on this.
Please do.
Well, but I put in the new Ferrari's V12 engine in there. And I make out that there's a firing order to the cylinders in terms of what moves first. And they jump around. It doesn't go 1, 2, 3, 4, 5, 6, 7, all the way up to 12. And I was highlighting that gold is first, and we've discussed that. And then I feel Bitcoin is next. Then I probably expect we'll start to see, once gold resumes, a little bit more out of silver. We need the gold-silver ratio to flip 75. To
75.
show,
You expect 70, we will see 75.
yeah, I want that to the downside, and then it will be very quickly, I think, to 65, and that'll be a neckline for a big head and shoulder. I'll show you the chart for that.
Please.
And it's the people in alts in the crypto market. They should have been in Bitcoin and should stay in Bitcoin. Most people should be in gold right now, predominantly. Look, I've bought silver myself because I always fear that moment of unobtainium, but you should stack gold right now. You will have a chance to rotate, and there are key triggers when that comes. This is going to be such a lengthy cycle. This is a decade and a half in play, and I feel it's only really just begun. And this is going to be an incredibly lengthy cycle. And the miners fit kind of here between Bitcoin and the altcoins. But when they go, their potential to move is far, far higher than gold. So we're not saying gold is the fastest horse. We're saying it's the first horse that has started the journey and the right one to be on for now. If you want to maximize gains, you need to have a little bit of all, but you want to be in the God market, the king first, which is Bitcoin and gold, first gold, and now you should roll into some of the Bitcoin if you're open to cryptos. I don't mind if people aren't. I do see them as captured. And then silver, and roll into miners as well.
In terms of relative value, gold has far outperformed the US dollar. Since being divorced from any backing, the greenback has lost 99% of its value compared to gold. That's a tremendous decline for the world's reserve currency. The outlook on investing in precious metals and crypto sees these assets as anti-fiat, with gold as the leading asset in the current economic cycle. Given the current economic system and FrancisHunt's insights, could rotating investments across gold, Bitcoin, silver, and miners be the key to maximizing returns in an anti-fiat environment? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.